Hello and welcome to all the Web3 enthusiasts out there. This is Max speaking. Welcome to the new exciting episode of Synopsis. This one is going to be hot. And as you can see, this gentleman with a great beard in front of you. So welcome, Yves La Rose, CEO and founder of Vaulta, formerly EOS Network. So Yves, welcome. And how are you today?
I'm doing great, Max. How about yourself? I'm really happy to be here.
Yeah, I'm also good. Thanks for asking. So, the great times for Volta EOS are ongoing, and we're here right on timing to discuss all the things connected with this. So, a bunch of questions I have for you. So, let's dive deeper into this topic and get straight to the action if you don't mind.
Yeah, let's do it.
Okay, so unsurprisingly, the first question is going to be as follows. So, yeah, the great rebranding of EOS into Volta is ongoing, and I'd
Mm.
like you to tell us more about these changes that are brought by this rebranding. And also, one small question: Are you all in on Web3 banking and not into dApps anymore?
I mean, it's a combination of both. So let me answer, I guess, the first part in terms of the rebranding, where we're at, and kind of what led to this. So effectively, we took over as the community. We took over the management of the blockchain, so to speak, or the coordination of the blockchain, because EOS, when the foundation was created, didn't have a centralized entity, didn't have a foundation. The network didn't launch with any team allocated tokens or any kind of foundation as other layer ones typically have. And so after it became apparent that the company that launched the ICO wasn't really going to be supporting the network, they weren't delivering on their promises, and they weren't really developing the code base anymore. That's really what the trigger was. The foundation was created by the community for the community, and essentially the rebranding effectively started then. And that's almost 4 years ago now, because the foundation was created in August of 2021. So when we first started, we didn't even have access to the GitHub repo. We didn't have access to the IP for the logo, for example, for the chestahedron. We didn't have access to the social media accounts. So one by one, we needed to create our own IP essentially. So we forked the GitHub repo, and we created a new brand around the software stack, the underlying software stack that powers the network. We created new socials, and over time, we started creating our own code base as well. So we've hard forked a few times since then. We've added a lot of functions and features to the code base, and so the rebranding effectively began pretty much 4 years ago. But we always knew that at some point, when we were looking at this idea of a rebrand, it was kind of in a spectrum. On one end, you don't change anything. On one end, you just leave everything as status quo, and you just keep going in the same direction that the network had been previously going. And on the other end of the spectrum, you go all the way to change the name, change the token ticker, and you really essentially create a new brand and a new path forward for the network. And so one by one, over 4 years, we started moving along that spectrum, all the way leading to what we have now, which is Volta and a new token ticker. But that process took a very long time because it's quite complex to be able to coordinate all of this. If we look at Volta, it's listed, or I guess EOS was listed on just about 200 or a little over 200 different exchanges. So coordinating something of this magnitude while ensuring that there's minimal, if no, issues or concerns for the token holders is quite substantive. And so we did this over the last 4 years, but really over that period of time, because we kept adding on to that code base, we hard forked, as I mentioned, on a few occasions. I think three hard forks since the foundation was created, multiple code updates in between. A lot of the functions that we've been adding to the code base have been going in one direction, and that's that Web3 banking direction, part of the question you asked. Everything we've been doing is about increasing the throughput capacity, the security, the resilience of the network. And that fit really well with the open finance field. So think DeFi, but even more than DeFi, expanded DeFi in terms of what that means. And so when it was time to choose a name, choose a ticker, and kind of plant the flag in terms of where we fit best, Web3 banking really was at the core. So it doesn't mean that we don't have any other dApps. It doesn't mean that you can't do anything else on the network. It's a permissionless layer one. So obviously you can do anything you want. And as an example of that, we just partnered with Ultra, which will be our gaming hub. Ultra is an incredible gaming platform based on blockchain or blockchain-based gaming platform that leverages the software stack that we create and so that our softwares are compatible with one another. So it effectively makes it kind of the gaming hub of the Volta ecosystem. But in terms of Web3 banking, what we're focused on right now is finding partners and developing applications either in-house or bringing them on the network that really fit within the holistic Web3 banking view. And we can get a little bit more in detail if you want later in terms of what Web3 banking means for us and what I mean for that. But effectively, as we created a new brand, as we aligned that brand with the work we'd been doing, with the code that we had been developing, the functions, features that exist on the network, with the investments that we had made over the years through our ventures arm, leveraging our portfolio companies and what they bring to the table, the licenses, etc. And looking as well in terms of what was out there in terms of opportunity, especially since the Bitcoin ETFs were approved in last January, and we saw a lot of the capital entering the broader blockchain ecosystem being much more mature than it was before. So we're talking institutions coming in, the kind of services, the kind of products that they're looking for, the kind of things that they're looking to do with their digital assets. We really saw that everything was heading for us in the Web3 banking direction. So that's where we planted our flag. And with that new brand, it enables us to kind of get a new life, to really set the stage for here's who we are and here's where we're going, which is very different than what I guess the brand of EOS was previously.
Well, just awesome. So thanks for the super detailed answer. So you even answered my next question, and the main thing, well, what I heard about is something I'm always very pleased to hear is that the first reason is making these changes for the community. So community first, and at least that sounds great, and I do believe that it is actually great. And yeah, we see that there was a massive work done already, and I cannot even imagine how much technical and organizational efforts
Mm.
put on that. And I just wish you the best of luck with dealing with a lot of the work which is left to do.
Thank you. Yeah, oh yeah, it's not done. There's still a lot of work ongoing to complete this, but so far it's been really great, and everything that we've made and the partners that we've had and all the exchanges, everybody's been really accommodating and really playing a key role in ensuring that there's a smooth transition for the community holders. And it really is about the community. I mean, when the network launched, I was a part of the community. We were running infrastructure for the network. We're just community members, and the community members literally leverage the blockchain itself, the governance mechanisms in the blockchain itself, to make this all happen. Everything is on chain. Everything requires a super majority to achieve consensus. So it really is by the community for the community.
Absolutely. And what I'd like to mention also, for such a massive change in the ship within the industry, everything seems to be going pretty smooth so far, and seems like everything sticks to the plan. So yeah, it's a great job you are doing there. And also, you mentioned a holistic banking approach. We will
Mm.
sure discuss it a little bit later, like in a few minutes. And for now, I'd like to inject one more question here. So we know that EOS Network Foundation was registered in Canada, while
Mm.
Volta states on X that it is made in America. In your
Mhm.
opinion, has it become easier to run a blockchain business out of North America in the past 7 years?
So to answer your question directly, yes, I think it has. But why the distinction between Canada and the US? So I am in Canada. And so I registered and I created the foundation as a non-for-profit in Canada. And the reason for that is because Canada has very stringent regulatory, I guess, policies, and it has laws around what a non-for-profit can do and cannot do, and what that means in terms of a decentralization for the blockchain. There are no owners to the foundation, for example. And I'm Canadian, so that made sense for them. But in terms of the Made in America, I'm the only person that's in Canada, and so all of our engineers, everybody who's actually developing the software, and who were previously developing the software as well, because we were able to secure them when we created the foundation, they're all in the US. And so the blockchain itself, the code stack, all of the code, 100% of it is literally made in the US. And so it's made in America. And so that enables us to get that distinction. And when the network was originally launched, the company that did the ICO, they were also US based. And so everything really from the beginning has been made in America. In terms of has it been easier? As I mentioned, yes, I think there's been an opening. I would say, however, that when we created this 4 years ago, and when EOS was launched 7 years ago, when I was an infrastructure provider, a block producer on the network, it wasn't as easy. It was very difficult. It was much easier, and we saw a lot of different companies and different projects register in more favorable jurisdictions around the world, because North America, Canada, US was actually very difficult to do. I kind of liken it to it's kind of a double-edged sword. So it's kind of a game of whack-a-mole at the same time, where because you're the only person that was building there and the only person that had to abide by the very stringent regulatory uncertainty in a way. So the components that were certain made it a little bit more difficult, and the components that were uncertain in terms of regulations made it very difficult because there's simply no clarity. But the idea was always that at some point we believe in this underlying technology that governments around the world and regulations around the world would eventually adapt, and that there would be an advantage at some point in having been created and operated under these jurisdictions during times of uncertainty where you had to over-report and essentially go out of your way to open the door for others. And so kind of leading to make sure that others could then follow suit. This advantage in the short term was maybe a disadvantage, but in the long term, we thought was going to be a very big advantage. And so now, when we are building applications or when we do reach out to institutions, we're able to showcase that we've been in this jurisdiction now for years, and we have a track record in this jurisdiction for years of operating above board with very stringent regulations and, I guess, requirements. And so this, I think, gives us a very large advantage right now. We have seen, especially since the Bitcoin ETFs have launched and now with the new Trump administration in, we've seen that it's been much easier to operate. There are a lot of, especially on the banking side, on the financial side of things, we've seen that banks are much more open to bank with institutions or companies that are dealing with the blockchain. So it's been a little bit easier to operate. The doors are opening faster than before, especially because we've been here and we've been based here for so long. We have a track record. And so, that was always the plan. And we're happy that now kind of the outside world is now catching up to what we saw.
Awesome. Thank you. So everything now is extremely clear. And now, of course, about the holistic Web3 banking approach, could you please
Mhm.
introduce it in more details?
Sure. So you and I, when we go to the bank, typically traditional bank, regular bank, we have access to a few services. We might get a checking account, saving account. We maybe can get a credit card through the bank, so access to credit. Maybe we get a mortgage if we wanted to buy a house, or a loan if you want to buy a car, that kind of thing. So you've got access to basic services. If you're a wealthy individual, if you're an institution, you typically have access to private banking. And in private banking, you have access to way more services than the bank offers that traditionally are not accessible to retail users, simply because there's an administrative overhead. There's a certain amount of capital that's required to be able to access those services because they cost money. Whether it be access to lower MER, let's say stocks or portfolios, mutual funds, that kind of thing, investment baskets, different ways of being able to collateralize your assets. All that's traditionally only accessible to large individuals, wealthy individuals, or institutions. And what we're attempting to do with our holistic banking approach is basically democratizing access to those services that traditionally are only available to institutions or private banking individuals down to regular retail users. Let me give you a concrete example. And when I say holistic as well, I mean kind of an end-to-end, all the different services that you would traditionally have that don't include simply financial services. And I'll get into what I mean with that as well. But in terms of concrete example, think of it right now where we've got kind of a proof of concept running for institutions whereby with Cefu and Binance, we're able to lock some assets. We're able to then mirror those assets onto Binance with Cefu as an example. That right there is typically only available to institutions. So if you're a retail user, you just don't have the capital to be able to afford the onboarding cost that Cefu would charge and the management fees that Cefu would charge to be able to mirror these assets onto Binance. The advantage of this is that your assets remain on chain. In this example, the Vaulta tokens remain on the Vaulta network, but then through MirrorX are mirrored onto Binance. So that's just step one. That already is prohibitive to retail users. What does this mean? Now you've got assets on Binance that are a mirror of your assets. And so your assets are actually safe, but now you're able to leverage the assets on Binance to be able to do things, trade. Second part of this, and part of kind of the proof of concept product that we're going to be working to offer to retail users. Now you've got your assets on Binance, you want to trade, but you're not a trader. Well, I know that you are, maybe you have more experience, but not everybody is very good at trading. And so you want to be able to earn yield on your assets, but you also want to be able to put them to work. You want somebody to trade with them. You need a quant team. You and I, as regular users, cannot afford a full quant team. That's just prohibitively expensive. It's quite, they will take a portion of the profit, and if that profit is not large enough, then they will charge you a base fee, and so it just makes no sense for a retail user. But for an institution, that makes sense because the amount of profit that they can generate on a significant amount of assets can easily offset either the one-time fees or the monthly fees, or even if there's a portion of the profit that's taken as their fee. If the profit's large enough, everybody's happy, and everybody wins. And so you're able to get access to that kind of service if you have enough capital. But if you're a retail user, you don't. The proof of concept retail user kind of Web3 banking application that we're building is a CDeFi product. Whereas the retail user, you'd be able to deposit your assets. Your assets would still be on chain. They would be mirrored onto Binance in a pool with other people's assets, with institutional assets. Whether the quants at the other end are managing $50 million worth of assets or $51 million of assets, it changes nothing to them. They don't need more quants, or you don't need more people to be able to trade on your behalf. You're able to run delta neutral trading strategies if that's your risk profile and that's what you'd like. You can earn yield from those trading strategies while also earning yield from the on-chain staking mechanisms because your tokens are actually still on-chain. So you're able to double dip in a way and earn extra yield all while your assets are safe. And this is something that would not be traditionally available to retail users because it's simply too expensive. The administrative overhead to run all of this is expensive. But because of blockchain technologies, we're able to bring that down to retail. Because whether you add, like I mentioned, a few more Vaulta tokens in a bucket or a few less, that doesn't change anything in the overall architecture of this. And so that's what we're building as one example of an asset. And in terms of holistic view, as I mentioned earlier, that's just one product, but there are many products in this stack that we're building, and we could get into the pillars later that are more traditional and some are less traditional, and we can get into the insurance portion later. But there are things that are not just looking at the Web3 banking side of things, but if you want access to financial products, or if you want access to a bank account, as a company, you traditionally need insurance as well. We're talking about regular directors and officers insurance, cyber security insurance. Like there's tons of different insurance that doesn't even have to do with the financial side of things. But you can't get access to the financial products if you don't have insurance. And traditionally, it's been very difficult in the blockchain space to get insured because it's a nascent industry, because the risk is unknown, because the risk is unknown. A lot of insurance companies don't want to insure, and or if they do, they charge extremely high premiums, which then become prohibitive and people can't access them. So we've looked at this from a holistic view in terms of what is required to be able to democratize access to financial services to retail users, and how can we basically bring that about and create a whole ecosystem that brings that down so that people can have access to it.
Wow, just wow. So much info, but thanks for the great examples. Everything seems to be in order, and who but not a founder of the project can describe the things better. So yeah, thanks for that and for clarifying all the things. And could you maybe tell us a little bit more about Vaulta's Web3 banking product offering?
Sure. So now we can get into the pillars, right? So the first one is wealth management. So we've got four pillars: wealth management, consumer payments, tokenization of assets, and the insurance pillar. So I talked a little bit about the wealth management before when I gave the example of being able to earn yield on chain while your tokens are actually mirrored onto a centralized exchange where now quant strategies can run, and you can have various different risk profiles. So you might be ultra conservative, you want a delta neutral trading strategy. There's another user that might be very aggressive. They're okay with potentially losing some yield or having more variance within their yield. So they're going an aggressive portfolio. And so we'll be able to also cater to different risk profiles. And that would be one product offering that we call kind of our CDFI rail, as an example. And that would be wealth management pillar. Another component of the wealth management pillar would be unlocking something that, again, has traditionally been accessible to traditional financial players, but is yet to really be accessible in the blockchain space. And that is the collateralization of your digital assets. Right now, if you go to the bank and you want to take out a loan, a mortgage, for example, to be able to buy a house, the bank will look at the assets that you own, the assets that you can control, and they'll determine your risk profile based on that, and they'll either grant you a mortgage or not. If you go to the bank right now and you say, but I've got 100 Bitcoin, they'll say, I don't care because we don't count those assets. Yes, but I'm looking to buy a, I don't know, $500,000 house and I actually have $10 million. And they'll say, well, your $10 million doesn't really exist. How much do you have in your bank account? And you'll say, well, I don't have anything in my bank account. I just have 100 Bitcoin. Look, I'm extremely rich. I could buy this house if I really want to. Sorry, it doesn't count. And so we're working with financial institutions to be able to unlock that potential, to be able to collateralize your digital assets, whether it be the Vaulta token, whether it be Bitcoin, for example, so that that collateral can be counted towards being able to offer some product and services. We know that the banks are heading in the direction. We know that it's just a question of time until this becomes the norm, but we want to be at the forefront of bringing this about. Another example of this is to be able to optimize, for example, tax implications. This one's a little bit more tricky, so this you'll have to do your own research in your own jurisdictions. But traditionally, you're able to collateralize your stock to be able to take out a loan. And when you borrow, so debt is not a taxable implication. So when you spend debt, that doesn't count as a taxable implication. And so what we're trying to do right now is being able to, through this wealth management pillar that I mentioned, the product I mentioned earlier, where maybe your tokens are staked and you're earning yield on your stake. What if you could also predict what that yield could be? And you could borrow future yield to basically have debt in the system, and that you could spend that debt. And that reaches into the second pillar called consumer payments. But what if, for example, you had a certain amount of Vaulta tokens and that you knew that by the end of the year, you're going to generate $1,000 worth of interest as long on average, as long as you leave your tokens in the mix. Well, what if I gave you access to that $1,000 ahead of time at the beginning of the year, where you can go and you can spend on a credit card at point of sale, so at a restaurant or at a bookstore, wherever it may be, on Amazon, wherever it is, that you could go and spend that money, and at the end of the year or every quarterly or monthly, we would be able to consolidate that debt to see whether or not you're actually repaying that debt, take about that yield that you're earning to repay that debt. That's not a taxable event. And so you're able to actually spend some capital without selling your assets, leveraging the assets you have, collateralizing them to be able to borrow money effectively, and leverage that. This is normal in the traditional finance space. People who have large amounts of stocks, heads of companies, Elon Musk, for example, very famous for this, borrowing against your assets to be able to spend on your daily, avoiding the taxable implications of actually selling those assets. You're delaying that. You're putting that towards at a future date. And so that's another type of product that we're looking at building in that wealth management side. I kind of touched upon the payment consumer side of things when I mentioned a credit card. Another product that we're working on is to be able to create a consumer-facing credit card. Think of a Visa, where in the back end it's loaded up with stable coins, so USDC, USDT at launch. And that's actually taking from your assets that are on the Volta network. You're really reloading your card so that you can go at point of sale and actually purchase things, leveraging your digital assets. So that we're kind of bringing about the Web3 space into the traditional finance space. So that's our consumer payment side of thing. Another example, we announced not too long ago, Virgo Pay, with the Virgo Group as a partner, a remittance payment initiative, essentially the Virgo Pay, that's what it is, whereby people in developing countries, we see a big trend where they go to developed nations, they work, and they repatriate funds back home. So foreign workers. Right now, when they want to do this, they have to use traditional payment solutions to do so, and it's very expensive because either it's a set fee, and if you're not sending a lot of money, then that set fee proportionally is bigger, or it's a percentage, and if you're sending a lot of money, then that percentage becomes very expensive as you send more, and you don't have many options. And so this idea of leveraging stable coins to be able to do remittance payments across continents, across the globe, makes settlement much faster, very, very secure. So your settlement is much faster than the traditional. In some instances, it can be a week or two before your funds are repatriated. So much faster, and then at much lower fees, all transparent, all on chain. And so that's what Virgo Pay is enabling. And so we've partnered with them so that all the settlements will be occurring on the Volta network. The third pillar of this Web3 banking approach that we're doing is a tokenization of assets. So the first partner that we announced for this, I mentioned a little bit earlier, is Ultra, which is a gaming platform. So think of all your digital assets being tokenized. So your in-game skins, your in-game weapons, everything that goes with a traditional marketplace in game, but now being on blockchain, so that you're able to trade those assets as well outside of the game, maybe on secondary markets, even maybe tertiary markets. And so the tokenization of asset space is our third pillar. So we mentioned Ultra as kind of a gaming platform and the gaming of assets, but we're going to be announcing and bringing on more partners that are going to be bringing traditional assets. So think of stocks that you're able to collateralize, commodities you're able to collateralize, certain jurisdictions being able to offer wealth management options and tokenization of assets. Think of ETPs, ETFs of digital assets and certain regulations, etc. So that third pillar is really all about the asset tokenization. And we see that RWAs, real world assets, are a huge growth opportunity and growth sector within this space. And so that pillar really aims to address that market and being able to bring about products and offerings. And so we've got Spirit Blockchain as a partner, we've got Ultra as a partner, and we're going to be announcing more next week, actually, in Las Vegas during Bitcoin 2025. And that fourth pillar, I touched upon it a little bit earlier, is the insurance side of things. And so we're a major stakeholder in a company called Blockchain Insurance Inc., which is the world's first digital assets captive insurance. The idea behind that, as I mentioned earlier, is it's very difficult, if not impossible, for people to be able to access regular traditional banking services if you're not insured. But it's almost impossible to get insured in this space because it's either prohibitively expensive or you just don't have any options. And so that really closes that gap that we found. So we partnered and we invested in a company that's doing this work so that the premiums will be much lower than traditional because one, because it's a captive, so there means to be able to go about savings there. Captive is more association based, and so there's different kind of organization method of providing insurance, but also because it's created by people from within the industry, so they understand the risk profile, and that's where right now most insurance companies don't understand the underlying technology. And so as soon as they hear the word blockchain or crypto, they believe it's high risk or it's unknown risk because they don't understand it. Unknown risk automatically puts you at a higher risk level, which means your premiums are much more expensive than if you did the exact same company and just didn't mention the word blockchain, you'd be paying way less. And so it's bringing about and closing kind of that gap that we saw that brings all of these products and services in line together. And those four pillars as a whole, and the product offerings that I just mentioned, plus more that are underway and some that will be announced next week in Las Vegas, kind of complete our holistic view of what we believe is going to be at the base of our Web3 banking approach.
Wow. Thank you. So, on the one hand, that sounds like four pillars, but so much info and sounds like a lot of directions, and for sure, like a lot of work being done. So, yeah, just
Yes.
I get applause for that, and keep
We've
it.
been working on this for a couple of years and there's a lot of people. So yes, it seems like there's so much going on. It's because a lot of this has been working kind of in the background for years leading up to the rebrand. And we're announcing a lot of things that already exist. So already proof of concepts that are already running or partnerships that were in the making that now we're announcing with products that they're developing. But we coordinated all of this so that it would align with the rebrand. So that's why it seems like it's a lot, but there are going to be things to launch. There are things that are already live, and then it's also planting the flag of where we're going as well. So some of the things are not live yet, and some of the things are, we are working on and we'll bring to market later. But it's been, as I said, it's been a 4 year kind of leading up to this.
Yeah, absolutely. And for sure, we will touch the question of what's happening in the future, but a little bit later, once again. And for now, the question is about kind of a business model. Everyone is always interested to hear something about the
Mm.
revenue. So if it's something you can comment on, could you please tell us what will be the main revenue streams for Volta? So it seems for us that on-chain remittance fees are too little to support the entire company.
Mm. Great question. So it's a couple of folds. So the network itself generates fees with the transactions on chain, and so the more transaction on chains that goes about to power the infrastructure providers of the network. And those tokenomics were revamped last year. So last July, the network updated the tokenomics on chain, and we created new buckets for infrastructure providers, for the foundation, for the lab side of things, so the incubator of the network, etc. So all of the on-chain components really rely on the fact that Volta at the base is a utility token. And as the network gets used, then fees are generated, and those fees go and offset the cost for those participating in the network. So that's kind of at the core. In terms of products and services, this is actually a little bit easier to explain because it's simply taking a cut of the fees that are generated as well from those services. So think of how an exchange works as well. For all the trading fees, they charge a certain amount of bips for the maker side and the taker side. Well, same thing when we're creating products. There's going to be a certain amount of minimal fees. Think of 5 bips, 10 bips on something that are going to be taken, and it's all about scale. So that if you don't generate a lot of transactions, or if your products and services are not really well used, well, you're not generating much revenue. But as you scale and as you start gaining more traction, then those fees become quite substantive, all while being extremely competitive in terms of the product offering because it's minimal fees. It really does not impact the user at the end. And so it's really about it's a scalable model. And it's really, or I guess a model that relies on economies of scale. And it's really based off of the underlying tech stack that we have that is meant and is built to be able to handle large volumes of transactions and large volume of users. To give you an idea and to put it in perspective, a few years ago, when this is multiple hard forks before where we currently are, and so the software stack was at a more infancy stage than it is now, still robust at the time, but nowhere the capacity of what it is now. We were able to generate for a period of time roughly 150 million transactions per day consistently for months. I think 140, 150. To give you an idea of the scale of that, EOS at the time was generating more transactions every 24 hours than all other blockchains combined. Every 24 hours, EOS was generating more transactions than Bitcoin and Ethereum for the entire year. So that's the power of the network. That's the underlying technological supply that the network can provide, and that's years ago. And so we're able to handle large amounts of accounts, large transaction volumes, all while the network still has more to offer. We weren't even running at full capacity at that time. We were doing this for months on end. And so at the base, what we've always positioned ourselves as is we believe that this technology at some point will hit mainstream. We believe that we're getting closer now that institutions are coming in, but it's just a matter of time until retail users start to leverage the functions of a blockchain without necessarily even knowing it. So they'll be interacting with an application, with their traditional application provider. So, think of their bank or a game or whatever it may be. Underlying that will be the blockchain. The end user doesn't need to know. That's abstracted that away from them. But the amount of transactions that they'll be generating, if you look at if this hits an application that reaches a lot of users, you're going to need to have a lot of power in the background, and that's what we've always positioned ourselves as, and that's where our revenue model comes from. And with the Web3 banking approach, what we're looking at, again, is those financial services, which really are at the base of what most people use the blockchain for right now. It's for financial applications, whether it be for DeFi, for trading, for value investing, whatever it may be, transacting some value across borders, even exchange. So people are leveraging blockchain services right now, primarily for the financial side of things. And so with our financial products, we see that there's a huge amount of user base that's already here, that's already leveraging this kind of products. And so we're trying to get a share of that. But also we believe that this is where new users will first start coming in from, because as we see the institutions coming in, they're looking for products that they can offer to their own user base. So these are traditional companies that already have users that are already in the financial space, and now they're looking to embed Web3 technologies within the product they already own, they already operate, they already have users, to add either those that increased security, the increased reliability, the decentralization, the lower administrative costs or administrative overheads, lower management fees, middlemen fees, etc. And so we're really looking to tap into that in order to be able to generate the economies of scale that I talked about, which then go and power the network, power the infrastructure providers, and keep this basically decentralized economy running and generating healthy amounts of profits.
Awesome. So thank you. And you already mentioned some of your partners, and could you please introduce your top ecosystem partners and how they help Vaulta develop?
Sure. I mean, so we've got a few. So I've mentioned a few right now. So I wouldn't say that there's necessarily a top one because we've got multiple depending on which bucket and depending on what it is we're trying to offer. But as I mentioned, the one right now that's very interesting that'll likely be the first different applications that people can leverage off of Vaulta. One of them would be Cefu with Binance with the Mirror X Cefu solution. We've got another very similar arrangement that is going to be announced next week. So that's we're pretty excited about that one because it opens it up to a whole new level and just many more users. So that would be another one that'll be announced. We also have Ultra, as I mentioned, which is a gaming platform. They have a game called Ashes of Mankind, which is kind of a traditional FPS, AAA looking game, but with in-game assets, everything leveraging on the blockchain. And they've got a really good SDK stack as well, so that developers in the gaming space are able to think of your Steam the Steam platform where you can go and look at your games and or think of even SDKs in order to be able to build games. So, Unreal Engine type of thing. They've got all of that, but built for integration within the blockchain. So, incredible partner. They're doing some amazing work. You should go check Ultra with the UOS token and the work that they're doing there. Really great partner. They've been in the business for a long time. They used to work in the gaming space. And so they're from within the industry. They know this very well. So really good partner there. And then the third one I'll mention again, big shout out again, is Virgo. So the Virgo Group, they've been operating exchanges, licensed exchanges in Canada, Australia, Hong Kong. They've got a US branch, I believe, Singapore, and they've got a few other regions where Virgo Pay is going to be available imminently. So we're talking about a few days or a week, give or take, where this remittance program and this remittance Virgo Pay essentially application is going to be launched. And that's a big one as well because they've got a tremendous amount of users already that are leveraging their platforms for this. And so they designed a service, a product specifically for this to just facilitate the end-to-end remittance component of this. So I mentioned those three. So Cefu, Ultra, and then Virgo Group as three different partners that are helping us push upon this new narrative.
Well, sounds like great connection, great partnership, and I do believe that there will be many more to appear soon.
Yeah, I'm being a little bit side. So next week we're announcing quite a few. So as I mentioned, everything's been leading up to Las Vegas. So when we announced the name Volta, we didn't announce the token ticker. We then announced the token ticker about a month and a half later. And next week I'm giving a keynote at Bitcoin 25 in Las Vegas, and we're announcing quite a few partnerships and new products and offerings. So I'm just being a little bit reticent of not dropping too much. But in a week you'll see there's quite a few more that'll be really exciting.
Okay, we'll be keeping an eye on it and watching closely. And a little bit more about the ecosystem. So, how do you plan to develop Volta's decentralized ecosystem? And
Mm.
will there be any funds or grants allocated for development of third-party projects on Volta?
Great question. A lot of what we just mentioned, the partnerships that I just mentioned, that is our mechanism to be able to expand on the products offering that I just talked about. So it's going to be a combination of us building in-house. So I'll mention one thing I haven't mentioned yet is XApp, which was developed in-house on Volta. It's our flagship Bitcoin scaling solution. It's effectively a Bitcoin transport layer that currently has roughly $850 million worth of Bitcoin locked in the network. And so that puts it in, I think it's about third position in terms of Bitcoin scaling solution and the amount of assets that are in TVL. So XSAT is our in-house product, and that really is one of the methods that we're going to be scaling. Is some of it we are going to be building. Some of it we're going to be building the bones to. So we're going to be building the building blocks so that others can build off of. Let me give you an example. So the Cefu Binance CDFI project, for example, all of that we will be building, and we're going to be announcing another one very shortly. But we're going to be building the rails to make this happen, the building blocks. And then we have licenses and we've got partnerships in certain jurisdictions. So we'll be leveraging those. But if you, for example, as a developer, have a different license in a different jurisdiction, you'll be able to leverage off of what we built to adapt it to your requirements in your jurisdiction, for example. And because we'll already have the kind of the rails set up, you'll be able to mirror off of that, leverage your communities, your user base, without necessarily having the burden of all the development costs, because we've taken that on already, and you're simply able to kind of mirror that and leverage what is open source and what we've built. So that's another mechanism. The other way that we're doing this is we go the investment route, and so we've got a ventures fund, and we've been investing in projects that align with our vision and that have either licenses that we would like to leverage off of, or they've got partners that are able to build within that tech stack that we've created. did, or that they see the opportunity in the Web3 banking space. They're also working in that front. They want a network to be able to access that through the XAT. Like I mentioned, we've got a lot of liquidity. We've got about $850 million worth of Bitcoin. So there's some applications that are building, and XAT is, I should mention as well, is built on our EVM layer. And we went the EVM route so that applications that are in the DeFi space, the majority of them are EVM compatible, so that they can simply come and plug and play and access the liquidity. So there's no extra onboarding costs or development costs because they've already built something. They already have communities, they already have users, they already have a product. And so it's just simply coming and plug and play, but then accessing the liquidity that we have that's Bitcoin on XAT. And so it's a combination of different things. So investments, in-house building, partnerships, and kind of the building blocks that I mentioned to be able to open that up so that it's a complete decentralized ecosystem.
Awesome. So now I have some pretty good teasers for the next week. We have a general idea of the plans for ecosystem development. So now it's time to maybe share some far-going teasers or announcements. Could you please describe the goals, the global goals of Vaulta for the next 5 years?
Sure. So, I mean, we keep on planning on expanding upon that. We've set ourselves up now for a very long time to be able to take advantage of this. We are in talks with a lot of the institutions that are, buying into crypto, that are coming into this space. We're in talks with them with what kind of products they'd like to see, what kind of services do they currently have access to with their capital and traditional financial marketplaces that we can replicate. And so we're not necessarily looking at, of course, some of the things will be new, but there are a lot of things, I think, in the very beginning, anyways, for the next 5 years, plenty of work to simply take products that already exist, that are already, the architecture, the idea is already there, and then figuring out a way to be able to port that onto and leverage Web3 technologies and the advantages, the inherent advantages of blockchain, so that we can really have a mirror of what people are used to doing with their capital. They can now do that, but leveraging Web3. So which then either brings about lower costs, higher profit margins, more security, transparency, decentralization, etc. And so that's really that first part. And I think that just that alone is going to take quite a bit of time because we're nowhere near what is currently accessible in traditional finance space and what's accessible in the Web3 space. We've got a lot of proof of concepts. We've got DeFi. There's a lot of different use cases out there. But really, if you look at everything that currently exists and what we really can offer and I'm talking about broader blockchain, so not just Volta, there's a huge gap there. And so that's going to take quite a bit of time to close that gap. And within closing that gap, we're also going to be able to see great, here are new use cases that we can't even think about right now. And let me give you an example. So when mobile revolution came about, there are applications currently that exist that would not really been able to exist on desktop. And it's not that they're necessarily special, but the fact that your mobile is for example Uber. You want a taxi. You're at a restaurant and you want to head home and you want a taxi. There was no way for Uber to come to existence if we didn't have mobile. You wouldn't do Uber on your desktop. Maybe if you're at home and you want to call a taxi, sure, but that's it. You'd be stuck. And so that use case only came about because mobile applications came to existence, and that became quite prevalent, and everybody now had a cell phone and a smartphone. And so we're looking at over the next couple of years as well, new applications that will only be possible and that we can't even think of right now. Because at some point, Web3 banking services and the Web3 functionalities will be integrated in our financial system. It will bring about new use cases that I can't even tell you what they will be right now because they can't come to an existence. We don't even know. Similar to how Uber, took everybody by storm with when mobile revolution came about. And so I think for the first 5 years, we got plenty of work on our plate just to complete the narrative and the vision that we already laid out. So more partnerships, more use cases within those four pillars, and then expanding upon that as we see things that are now possible that we can't even imagine today.
Well, thank you. And I believe that after all of these questions we discussed, we just created a great guide through the Vaulta and what's going on and what will be going on. So thanks for so much detailed and insightful information. And before we finish, I have a few questions just outside of these, just let's call them personal. So the first one is about all this ever-changing field of information. So the industry
Mm,
is growing, and it's almost impossible to be involved and to follow all the trends, all the narratives. So, what about you? If what finance and Web3 industry trends do you follow most closely?
So one right now that I follow particularly closely is RWAs. So this idea of tokenization of assets and collateralization of digital assets. I think that that's going to unlock so much potential for this space to be able to tokenize your digital assets for the real world, quote unquote, to recognize that digital assets are a type of assets and they do have value. And then once that's recognized and once there's a framework around that, regulations, et cetera, and we're starting to see the beginnings of this, stable coins is probably the biggest use case right now. And we see that in the US anyways, there's movement towards to be able to bring about legislation that will uh, create a framework around stable coins. That's a huge one that I'm following because that will unlock such a huge amount of potential for this space for that to be recognized. So I'd say RWAs in particular, and then within that RWA space, stable coins, a huge one. Once that is recognized, the amount of use cases and the amount of legitimacy that it'll bring about to this space will be massive. And for the end user, it's real world right away. You can start to do things with this. And it starts to impact your life. So for people that already have access to financial services, the gains are nice, they're good, but they're not necessarily world changing. But for a lot of people around the world that don't have access to traditional financial products and services, that's a complete game changer for them. That is, I think, going back to the original goal of being able to bank the unbanked, stablecoin legislation and just stablecoin growth and adoption in general. That's one of the biggest tickers that will revolutionize the lives of so many people around this world.
Awesome, thank you. So yeah, it's a great direction to keep an eye on, and looking forward for these gates of opportunities to finally open and bring us so many use cases and this thing everyone is discussing and mass adoption. Yeah, that's awesome. So now the final part, traditional one. So it's a kind of an open question. Um, could you please give some advice for the viewers of Synopsis? So not a financial, if you want, maybe even a financial,
No, yeah.
some call to action, whatever you find
Yeah.
useful to share. Go ahead, please.
I mean, we're still so early in this space. But it's one of those things where you're early, but you don't know when the tipping point is going to happen and mainstream adoption comes. So think of the internet. If you were, leveraging the internet in the late 90s, you were still very early. If you talk to people about having a website for your business, there was, people asked why. Why would you have a website for your business? It makes no sense. And now, if you don't have a website for your business, you're not in the game at all. And then when really Facebook and YouTube came about, and that kind of opened up the internet to just everybody, people started really leveraging Web 2, and then they start integrating that in their daily lives. That happened almost overnight. It was very quick. So if you're listening to this podcast, if you're listening to this right now, well, you're already a step ahead, I think, of everybody because we're still very early. So keep doing research, keep looking at what you believe is going to be a great use case. Spend your time, learn how to use the technology. Another component of this is simply being able to use it, get comfortable with using the technologies. Know what a private key and a public key is. At some point, that's going to be abstracted away. And that's going to be entirely removed from the end user. But knowing how this technology works, knowing the possibilities of digital assets, you're going to have so much advantage when there's going to be a massive wave of new people that come in, that you're going to be able to take that information gap and the knowledge that you have to your advantage to make better investment decisions, to make better decisions going forward, simply because you're going to understand it better. You're going to have more information. You're going to know where it comes from. You're going to be able to predict trends much better than others. And you're going to have just a leg up on the rest of the people. So I'd say continue learning, continue doing some research, look at what fits within your morals as well and values in terms of what you want to see, and go in and do some research on those products. But basically, if you're already listening in my opinion, you're already ahead of the vast majority of people. Just keep doing that, and you'll be rewarded in the long term.
Awesome. Thank you so much. What a encouraging finish we have here. So yeah, guys, this episode was a little bit longer than the average, but I do believe that everyone watched it till the end because so much interesting, insightful information and everything is in order. So even if after that someone has questions about Volta left, please comment. And yeah, guys, please thumbs up to see even more episodes. As we can see, this gentleman has a lot of to say for any question asked. So yeah, thank you, Yves, for joining us today. Thank you for your time. Hope to see you in more episodes.
Likewise, Max, thank you for your time, and thank you for everybody that's listening in. Really appreciate it. Cheers.
Yeah, take care, guys. Bye bye.